Good morning, ladies and gentlemen. Welcome back to the APAC BFSI Finovation Conclave, the day two of this two-day Finovation Conclave. We had a very interesting and insightful day one yesterday when initially some senior policymakers, including the Uttar Pradesh Finance Secretary, the GSTN Enterprise Architecture Head, the Reserve Bank Innovation Hub CTO, they talked about the sort of a technology roadmap on the policy front for financial organizations. Subsequently, we had panel discussions involving the technology decision makers from banks, financial institutions, NBFCs, insurance companies. So we had a panel of PSU banks and private banks, a panel of cooperative banks, a panel on insurance companies, and a panel on cryptocurrency. On day two, we are having six panel discussions. Again, they are happening parallelly. We just finished in the morning two sessions on security for BFSI and automation and digital transformation are happening across BFSI. Right now, this fintech session is happening, and parallelly, we are having one more session on intelligent automation for NBFCs. And before I introduce the panelists, perhaps it would be prudent for me to acknowledge the industry partners who have supported us in this program and without whose help just hosting a conclave of this magnitude might not have been possible. So we have with us as industry partners Avaya as our digital transformation partner, Fortinet as our security partner, Crestron as our gold partner, Devnagari as our language translation partner, MapMy India as our associate partner, Click as our active intelligence partner, and Choice Solutions as our associate partner. Now it gives me immense pleasure to introduce the very eminent set of and very esoteric set, if I may say, of panelists who are assembled today here. We have with us Mr. Dipesh Karki. He is a co-founder and CTO of LenDenClub. Welcome to the discussion, Dipesh.
Thank you, Rajneesh. Sorry.
We have with us Mr. Yashoraj Tyagi. He is a CTO and Chief Business Officer of CASHe. Welcome, Yashoraj.
Thank you. Thanks, Rajneesh. Glad to be here.
We have with us Akshay Mehrotra, co-founder and CEO of EarlySalary. Welcome, Akshay.
Good morning, everyone.
We have with us Rajat Gandhi, founder and CEO of Faircent. Welcome, Rajat.
Good morning, everybody. Thank you for inviting us.
We have with us Nirav Choksi, co-founder and CEO of CredAble. Welcome, Nirav.
Hi, thank you, Rajneesh. Great to be here.
And we have with us Akshat Birla, founder and CEO of Finovate Capital. Welcome, Akshat.
Thanks, Rajneesh. Good morning, everyone.
Morning. So, before I come to specific question and specific panelists, maybe it makes sense. What we have seen, the emergence of fintechs, while that had we have been witnessing this for the last few years, but specifically in these last 2 years, during the pandemic, we have seen the scope and the ecosystem or the whole range of operations of fintechs expanding multifold and expanding very fast. So maybe before going to any specific panelist with specific question, I'd like to put a generic question to open to all. Any of the panelists can take it up. Very broadly and very briefly, was the pandemic a boon or a curse for fintech? It looked like it was a boon for fintechs. So What would be the opinion of the eminent panelists here?
Rajneesh, if you allow me to start, I think the pandemic was an extremely interesting time period. First, it gave us time to really think how to really change the way we approach the consumer segment. The second, it allowed mass digitization and whatever the inhibitions that digital will take time to grow and fintech will take its time to emerge. I think those inhibitions got diminished. And third, as we started recovering from pandemic, the agility of let's say early stage companies are far larger than traditional, and we could really grow and expand in a very fast manner. I'll give my own company example. We have grown 6.2 times in the last since wave one. That's a phenomenal growth that we saw in every line function. 6 times growth in customers, 6 times growth in AUM, 6 times growth in monthly velocity. So it's a great thing to get done. And the fourth part was, I think the clear partnership way of building out businesses, the openness of both banks to collaborate with fintechs across industry has happened. So when you look at these four elements, I think the fintech industry is now emerging as a very large space coming through. And I think we expect if the industry, let's say unsecured lending is supposed to grow at 20% CAGR for the next 5 years, I think fintechs, how do they grow from, let's say, a 2% market share to a 30% market share in that entire area?
Thanks. That's an interesting premise on which we started. Now I'll come with specific questions for each panelist as we elaborate on this subject. My first question will be to you, Dipesh. Uh, we talk about fintechs, and we talk about technology, and most of the fintechs are sort of born in the internet companies, or born in the cloud, internet native companies, if you may say, and obviously they are more technology savvy. So how have we seen adoption of technologies like big data and artificial intelligence, and how have they accelerated the growth of fintechs, especially during these pandemic couple of years? Dipesh.
Right. So thank you, Rajneesh. Interesting question. So in fintech, the use of big data, machine learning, and to some extent, a novice version of AI is used widely to monitor, various accounts such as credit, cash, investments, wealth management, even robo advisory to some extent, right? With the advent of AI and big data, today BFSI is able to build a much richer insight about a customer as compared to the through a traditional or a physical mode, wherein which is encouraging the BFSI player to add a lot of process automation, right? With the growth of AI, cognitive process automation is also advancing, thus solving complex problems in the particular segment, right? Even credit cards, underwriters are implementing predictive analysis for fraud detection to reduce false positive cases, right? Applications such as liveness checks, video KYC got much more widely accepted post-pandemic, to onboard customers digitally. It had its own fair share of challenges. However, it has improved a lot over the last 2 years, right? And as the world was going through the pandemic, many brick and mortar based structure was struggling, to sustain the market. However, digital players were working towards innovating both onboarding as well as evaluating the standard obligations of the customers through multiple data points provided by the customer based on consents, right? Number of startups on big data and AI have also emerged quite well over the last few years, offering uh, offering almost omni-channel view of a customer's compared to that of a traditional data points with just bank statements or just the basic KYC details, right? Wherein today you can build an entire persona of a customer just by looking at their social score or maybe just reading the metadata of a customer, ensuring, of course, the data protection and privacy of the customer. So, in short, I believe big data and AI has become an influential technology in order to innovate the today's BFSI segment.
Thanks, Dipesh. Yash, I'll come to you next. Taking forward the cue sort of which Dipesh mentioned, uh, we all know that increased digitization is a sort of the norm now in BFSI. So, from a fintech perspective, how did the fintechs support banks and other NBFCs to run very smoothly, especially during these challenging last couple of years. So, how did the fintech sort of help the banks and NBFCs or the more traditional financial services organizations to run smoothly with increased digitization during this period? Yes.
So thanks a lot, Rajneesh, for that question. I would kind of second what Akshay started off with and what Dipesh just mentioned. A couple of things, right? Like if you look at a very broad level, and when you put in the context of the pandemic, see, we all know that personal finances of customers are extremely close to them, and as a result of that, banking slash finance has always been a high trust game, and that had sort of been for a long time before the pandemic a prohibitive factor for certain segments of the population to still be extremely comfortable with traditional banking services, even though they might involve slightly more hassles. However, the pandemic kind of forced that change to happen in customer behavior through rapid digitization, and simply because of simple facts that you can't visit the branch closest to you and do a banking transaction, and hence you would kind of use an online fintech player for that. And people realized that, and people said that, okay, this is what is driving the consumer change. The regulator realized that and kind of and kind of followed that, and as you could see with KYC processes that were, say, as the page mentioned, far more friendly in terms of a digital only approach as well. And so you've seen that to kind of support that increasing digital slash online movement of personal finance, whether it be lending, it could be investments, it could be insurance. We have seen that even banks have tried to make that move big time, and such sort of moves don't happen overnight. And as a result of that, we have seen an increased collaboration between traditional financial institutions and fintechs to help drive this change and make sure that such changes do happen very smoothly. The classic example being the rise of neo banking in India, wherein you see a lot of very high synergy collabs happening between modern age fintechs and some very traditional banks as well, which is only bound to increase over time as we go ahead. Even in very niche segments like, say, gold loans, if I may add, and you'd see that there has been a huge advent in the kind of collaboration and joint efforts that you see being put in by banks and fintechs. So this will only go up because there are certain key strengths that traditional institutions come in with. There are certain strengths in terms of technology, agility, speed of execution, expertise in digital that a fintech would come in with, and there are certain products that very well can be executed and put out there by the sort of collaboration that we have been seeing so far, and would only increase over time, and that would kind of essentially give you the 30% sort of a fintech market share that Akshay also alluded to.
Thanks, Yash, and you touched upon again a very critical part of it. Uh, I extend this question as I come to Akshay next. Uh, One important critical aspects for banks and other financial services companies have been enhancing their customer experience and delivering through omni-channel delivery mode. So now it can be through video, social media, text, bots, whatnot. So these omni delivery channel modes are there. How can fintechs, or how are fintechs rather, I would say, helping banks and other financial service organizations enhance their customer experience through these omni delivery channels? How do you see that, Akshay?
So, Rajneesh, I think let's first look at two, three parts. I think the clear establishment has happened that there are lots of innovation and digitization possible to give better UI UX to the customer, and digital is a clear path winner where people are adopting newer things to uh, journey wise the customer. Now let's look at three or four partnerships which are emerging. While there are some fintechs who are partners to, let's say, traditional banks and fintechs, allowing them to compete in a digital manner. But now the differentiated partnerships are coming in where banks and NBFCs want to partner fintechs for three or four purposes. Let's look at first. We saw the regulator also opening up to co-lending, and we've noticed today that across the board, most banks, especially larger FS companies, have realized that the only way they can go behind the digital customer is partnering with the fintech. They provide the capital while the fintechs provide a better journey for really handholding that customer. And we are seeing a extreme high impetus here. For example, we went from having two co-lenders to now seven co-lenders, and almost doing 109 or almost 200 crores a month on co-lending alone. That's the first change which we saw. The second one was many traditional companies realized that it is not possible for in their unit economic model to service a particular type of segment by themselves, and that's where the collaboration is coming in with fintech to say, I have suppose a 10,000 customers. There are 4,000 of them I can service well because my OPEX model and my risk model allows. But can the fintech service the balance, or a new age company service the, let's say, another 4,000 people? And we have seen that with almost six other large partners, and these are very renowned names. I don't want to give out the names, but they have actually come and said, let's work together. I'm a bank, I'm an NBFC, why don't you work with me? You service the customer that I'm not able to service, so that the customer is protected and remains mine in a good manner, right? And I can give in your digital experience. And now that is really changing the way uh, we are seeing innovations to happen. The third, we are seeing lots of new age fintechs are getting created who are becoming partners to traditional players and fintechs as the front ending them, which means there's an intermediary who allows a traditional bank on supply side to connect with digital sides who has the demand, right? These connecting fintechs then bring in easier connections to multiple lenders, bring in standardization in, let's say, better KYC systems, which fintechs need, better account management system, which allows us to do real-time transactions for consumers. And if I look at least the fintech lending today seems to be arriving, right? That there is clear disruption taking place. Customer demand is almost up. I can't give others example, but I would say today we get almost 1.5 million consumer demands a quarter. So the demand has really gone up. The supply is being managed quite well also, right? With the new partnerships channels coming in. So I think the industry is now going through very interesting trends. And I think if I look at these three trends could really be the next mover advantage for the category.
Thanks. We will come back to this point later. Rajat, I'll come next to you. And my question is obviously with the operations and the business model of the fintechs, we have seen a proliferation of these mobile apps, the financial apps, which are being now extensively used, and they are fairly mainstream now. So, how do you see the future of these financial mobile apps? And more important, I'd like to touch upon the two aspects. One, the cybersecurity aspect, and the second is the compliance aspect. As we know, overall, BFSI itself is a highly regulated industry. So, compliance plays a critical role. So, these financial apps, where do they stand today, and where would they be standing in future vis-a-vis compliance, and more critically, cybersecurity, because so many consumers are using so many devices, and sometimes the networks are also not really reliable, and most people are not so tech savvy, the consumers. So how do you see the future of these mobile financial apps, Rajat?
Yeah, hi Rajneesh. Thank you for the time. I think a very interesting question. I think there's a kind of a the way the question is structured is I think I'll have to clarify that on part of it. First, one part is the mobile app. Mobile app in itself doesn't do anything. It's just a distribution medium. And what maybe you're talking about the financial services companies using mobile apps to do certain things. Now, within that, there are two parts to it. One is a regulated entity and one is a non-regulated entity. Okay. Now, a service is being offered by a regulated entity, whether it's through app, mobile phone, or website or any other distribution, whether a branch network, it's totally governed by the whichever the regulator they are under. Okay. Now, I guess your concern is around the non-regulated entities. They could be legitimate entities. Non-regulated entities doesn't mean that they're illegal entities,
Precisely.
right? Now, case an example is a Bharat Pay or a Cred. I'm sorry using those names in a public forum, but they are trying to distribute certain aspects of various models of getting into lending without a direct license at certain level. Now, you could have a question around that. Okay. And what is this? How does a customer journey takes place on a cred when cred is offering a loan, or a Chinese app when it is offering a loan, and whether they are regulated entities or not. And the issues have come up when the non-regulated entities have started offering financial services or become distributors without any regulatory oversight on them, directly a direct oversight or a soft oversight. So those are the issues which are there, and that's when the cyber security and those things start coming in, because as part of the regulation, like a company like ours, which is an NBFC P2P, we are a highly regulated company, wherein our security infrastructure is audited by RBI, by CISA. It's a CISA audited. We have to have those reportings with RBI. We have quarterly reportings to RBI. So from that point of view, we have a fit and proper criteria of the directors. So all these things start get missing when you don't have non-regulated entities offering these services in BFSI. So that's the big concern. That the whole industry, the way it is moving, the customer has to be it's customer beware. I think that's the only thing one can talk about it. And rest of the thing, the regulators may have to intervene much more. They've come up with a digital discussion paper by RBI, and that does talk about various aspects of these what I have talked about. Yeah, so that's my understanding of the whole ecosystem as of date. Sorry, I've been little upfront on it. The real issues which are confronting the industry, I've tried to plate it out. And of course, with that data privacy issues come in. So there are a lot of questions which have, like, I have also more questions than I can answer them right now around this.
Sure, sure. That it's obviously an evolving area, if we may say, and think so. I'll sort of extend this question to Nirav. I'll come to Nirav next. One, where do the fintechs? We are talking about. We are sticking to the mobile apps right now, and app security, mobile banking frauds that can happen, risk-based authentication that are required, data privacy. These different issues. Where do fintechs offer support in terms of mitigating these challenges? Nirav.
Well, it depends. I mean, if the fintechs are deeply integrated into banking ecosystems or have access to sensitive customer data, then obviously systems for those fintechs need to be robust enough to be able to manage that data in a secure environment. Now, unfortunately, there isn't really regulation around non-NBFC fintechs yet, but it's a matter of time before that comes out, right? RBI has already indicated that they are working on a framework for that. But I think the key element here is more than fraud, right? Because until you have access to transaction data in partnership with banks or you're integrated there, which most fintechs are not, other than sharing data one way. Uh, you don't see that happening. Where you see challenges is data security being very very loose, and you see uh, data being sold or data being used for purposes other than what was consented for. I think that's really where the challenge is likely to be.
Thanks. Thanks. Next, we come to Akshat, And my question to you is overall, when we are talking about um, fintechs by nature, as we mentioned earlier, are more digital native companies, maybe sometimes born in the cloud companies. But now fintechs are working with the traditional BFSI companies, and most of them are migrating many of their applications or operations towards cloud. How are fintechs helping the traditional BFSI organizations migrate towards cloud and while and sort of maintaining their business and operations on cloud? How are fintechs helping these traditional companies in this migration?
Yeah, hi,
Akshat.
Rajneesh. Yeah. So, see, I mean, at the end of the day, when most fintechs are there because there is a need that has not been met by, say, the traditional incumbents that have been there, right? I mean, this may be a contrarian statement, but I mean, there is no innovation on base product per se by the fintechs that are there right now, right? We have all innovated on top of a need in terms of a gap being there in the market, the incumbents not meeting that gap, and us going and sort of bridging that gap for them, right? Be it distribution, be it underwriting, be it better customer service, and a lot of the panelists referred to this already, right? And a lot of this is down to how nimble and how innovative fintechs have been in terms of deploying these solutions, right? And this is where the strength of fintechs come in, right? I mean, traditional banking ecosystem has their strength in the capital, in the balance sheets that they've done, in the risk management systems that they've got. Fintechs have the strength in terms of technology that they can bring in. So even for us, I mean, a lot of the work that we do with so for us, I mean, when we do lending through our partners, a lot of them also piggyback on our systems because we've built out systems over a period of time, and these guys have come to rely on that, being partners on sort of lending on them, and have started using the system as basically platform as a service, right? And we see that happening increasingly where fintechs are bringing systems which are cloud-based systems, which are easy for plug and play to these guys, and hooking into their core banking systems, and providing the right bridge to bring in the right level of digitization, bringing the right level of service to their customers, bringing even to to the extent of going down the route of how do we assimilate the big data and machine learning with all the data that you've got, right? I mean, there is not much being done right now in the industry, but there is immense amount of data out there, right? I mean, this is a great opportunity for us to sort of leverage together with the BFSI segment.
Okay, thank you. We have one round with all the panelists. Now, again, and certain issues came up. From these specific issues, now I'll keep my questions open to all the panelists. The first thing that we heard about, and some panelists mentioned it, uh, fintechs are a sort of the emergence of fintechs has been to, I may say, innovate on certain products depending on customer requirements, which innovation maybe the traditional BFSI organizations have not been able to do. So fintechs are offering that innovation based on customer needs. Uh, Keeping that premise in mind, obviously fintechs are very closely working with the traditional banks or the insurance companies or the traditional NBFCs. So, how have having said that, these traditional BFSI companies themselves are undergoing significant digital transformation now. So, how have the conversation of fintechs with these traditional BFSI companies changing in recent times, especially as we see someone mentioned the neobanks or the insurtech companies which are emerging. So, keeping those things in mind, how have the conversations with traditional BFSI players with the fintechs changed over the years, and what are the salient aspects of that It's an open question. Anyone of the panelists can take it up.
So, Rajneesh, if you allow me, let me take
Sure,
a shot at this.
definitely, Nirav, go ahead.
I think most banks today or traditional NBFCs are looking to partner with fintechs to drive digital innovation within their ecosystems. So we have seen an increasing trend of banks working with companies like CredAble to license out our platforms, to use our platforms to serve their customer journeys better. And these platforms are not only front-facing platforms but very deeply integrated into their core banking ecosystems. Now, this also you're also seeing emerging trends of neobanks, like some of the leading neobanks white labeling their solutions and offering that to banks. You're seeing the same thing happen, across embedded credit. You're seeing multiple solutions that banks are looking to digitize. They're looking to partner or license out or even acquire in many cases technologies directly from the new fintech players. So I think that's an increasing trend, and we're seeing that happen globally. And I believe that is something that is going to keep happening as we move along this chain.
I wanted to add to
Anyone
that,
would
right?
like to add on this? Yeah, please.
I mean, it's exactly. I mean, what Nirav is saying is exactly what it is right now, right? But see, right now the conversation is very cordial. Fintechs need the banks, or NBFCs need the fintech, right? Now, going forward, is one going to become commodity or the other, right? I mean, because at the end of the day, how is this going to evolve? We've seen that happen with Bharat Pay as well, right? With PMC Bank being acquired by Bharat Pay and Centrum together, right? That is going to be an increasing trend where if you're not going to evolve on basically your digital journeys, your customer servicing, you will just become a commodity at the end of the day. Capital is already a commodity, right? First it was distribution, right? Distribution was king in terms of sort of a lot of different entities propping up because they were able to sort of offer better distribution. Then with digitization, distribution is also not so I mean, not so much of a defensible element as well. This is where sort of your customer servicing, your how do you analyze the data, how do you sort of underwrite the data, all of that is becoming a lot more important, right? Once this is being sort of built out by the fintechs, where do the banks come in, right? I mean, because you will see a lot of consolidation happen with fintechs and banks sort of integrating together or existing as a single entity. But right now, I mean, clearly, I mean, everybody is friends, everybody is happy because we both need each other, right? In the future, it's going to be a very interesting proposition.
That's a very interesting premise. In fact, I would like more opinions on this. Say,
Can I
typically,
comment?
right
Can I?
now, if we may loosely say, it's a consortium model of working, but there is a possibility of cannibalization in the future. So, I would like other
Can I
opinion
comment?
on that.
Yeah.
Yes,
So
Rajat, please go ahead.
I don't think the way the present things are going, any of these fintechs can go and attack any of the banks or anybody. That's the reason they're collaborating. And since I've been on internet business for last 20 years, it's not that a new startup will come and eat into your existing business, doing the same thing better or cheaper, or whatever it is. It's typically different sets of technologies which will come in. So it's to give you example, Ola or Uber came in. They didn't go and start buying and giving the same service which Meru and all the other taxi Kali Pili were giving, right? They came in with a whole new thought process with a new technology and the new way of distributing, and the customer shifted. So when the consumer shift happens, which typically Paytm did with the consumer shift in payments, okay, or all the payment companies are doing. In my mind, in the core banking part of it, whatever the fintechs in the lending are doing the primarily what these guys have been doing, or the banks have been doing, or have chosen not to do, as one of the panelists talked about, and for different reasons, because they didn't find those assets viable enough or to lend money to. What will happen is there are bigger trends which are taking place. Like as I gave you the example, Ola and Uber, you have to see the larger trends in the technology arena. Like out there, why did Ola and Uber came up? because you had smartphones with GPS built into it and Google Maps with everybody. Okay, that's the reason those came up. Now, what is the world going to look like? I see a bigger trends coming in around DeFi. I see bigger trends around IoT. I see bigger trends around your the cryptocurrencies and the central banks getting into it. That will, if I don't use a harsher word, will disrupt the banks, because that's what is creating now. Today, I as a Faircent, if that digital currency comes in, I have more questions. I'm more excited about that than working with an ICICI or HDFC Bank, because that wallet, what is the so primarily the banks are distributors of this money, which RBI issues. Okay, your bank account is primarily in a wallet. If I can open that wallet with RBI and I give a wrapper of fares, and why do I need a bank in between? And we are talking about 12 months down the line, which finance ministers talked about. What I'm not talking about some rocket science which is going to happen 5 years down the line. Okay, or the world will change. Now, if the central banks are giving, so these are the bigger trends which are taking place. When they converge, you will see banks getting disrupted. Not the fact that I have introduced a pay now, BNPL and all that. That is not going to disrupt them, because those are products they didn't want to enter in the first place. They are high risk products. So when these trends happen, these converge, and I have a great belief in IoT, because that will change the way the underwriting will take place, right from the shop floor or to the factory floor, directly into the data, getting with merged with GST data. You can do much far superior underwriting than anything else. Uh, so I think these are the bigger trends which will disrupt the banks and the stuff, rather than, as I said, just nibbling away some parts of the banking.
But Rajat, I mean, if I just add to that, right? I mean, you've already taken away a part of the investor pool away, which would traditionally go and put their money in their FD. You've already taken a part of the pool away, which is probably going to lend or borrow from the banks.
Yeah,
Now,
yeah.
these are,
So we know.
you're right, nibbling away. It's nibbling away. But the more that happens is when I said in the future, this is going to become a
Maybe,
big concern for them, right?
maybe Akshay,
So
I'll step
as
in
a
here.
panel which is on fintech, I think the bigger trend is not giving a better technology to bank and collaborating with them. So like we are not collaborating with banks except for using their infrastructure of, because that's the law. I need to use a bank account. Given a choice, I would not even touch the banking system. My interaction with banks has been very slow, bureaucratic. Even the best of the private banks don't even want to talk. They're happy because they have a huge amount of regulatory arbitrage out there and ring fencing,
Yeah.
and which is actually, so either it's not helping anybody. Uh, so they're like, the subject is more loyal than the king kind of a thing. I remember when we went out in the market, when we started, we all wanted an escrow account. None of the banks were even ready to talk to us. Whereas
There
the
are five
regulator
fintechs
was
basically.
ready to talk to us.
There are five fintechs now which are offering you escrow accounts, as a service.
Huh, but the moment we hear about P2P lending or any
But,
very
Rajat
innovative
and
stuff,
Akshat,
they tell you to go to RBI. As long you tell them, हाँ sir, हम ये current account खोलेंगे और आपके साथ काम करेंगे, वो he's happy. But give him an innovative business model, genuinely disrupt, which he's never heard about, he'll not open your account.
But Rajat, that makes sense
Just
also,
in the crypto,
them
right?
being an actuarian.
Huh?
Then it also makes sense that the bank becoming an actuarian of your fund, right? While the innovative products out there making innovative front end gives a better experience to the end customer, right? That only makes sense to us. Escrow being one of such examples, and today even the banking infrastructure for a retail customer is not so convincing, not so enticing, right? Today, let's say you talk about the top three banks, ICICI, Yono, right? And then there is Yono of SBI, then there's ICICI, and then to some extent SDFC. Apart from that, I don't think anyone would be interested in looking at any bank's mobile banking experience or a web interface, right? But with the advancement of new banking platforms like NewX, Fire, or the likes of them, right? I'm sure many people have started moving towards banking now, right? Otherwise, there were so many underserved segments out there who are not being brought to this digital space, right? And the demon showed everyone it is high time for you to move to a digital space. So I think innovative products like that in neobanks and even on the insurance space, right, is definitely going to bring in that innovation in order to make sure that the retail banking experience is enhanced. Of course, on the backend side, for example, clearing and all. So there's going to be a lot of things, but it is a bit slow. But that is itself a huge part of infrastructure, wherein bank can take care of those parts.
Frankly, the banks which you the apps you told me, like Yono is a very good app. It's like IRCTC. Okay,
Precisely.
so you can't talk much about it. HDFC has I think, a 40-year-old technology. Okay, they were shut down for nearly 6 months. So what are we discussing out here? So let's call the spade a spade, right? And yes, since I don't have much to do with banks, I can talk about them because we don't take money from them. So the reality is that the technology is not up to the mark. Customer protection is not there. Just putting password after password. Just because you have three passwords to fill in before entering an app, it doesn't make it secure. You and I know it, right?
Right.
And there's so much fraud happening right now, and there's so much pilferage of money happening, and there's no customer protection around that.
Customer
So
service and customer empathy also, Rajat.
no, so you lose money from your bank account. Nobody's responsible. You keep on running around. The money is gone. This is the first time. So if you see the banking, if you write a check, the onus is on the bank to prove that the money went out of your bank account, and they are responsible for it. Whereas today, a two-factor authentication, if they say that the OTP was coming, you cannot get your money back. And we all know you can hack a phone in 5 minutes, right? So I can straight away read your OTP and put it. So I think there are genuine issues out there with the infrastructure which we have today. People are losing money. So we have to, these are the questions which have to be answered. No
Rajat,
one
who will
thinks
fix this?
a proper
Who will fix
solution.
this?
Pardon?
Who will fix this?
No, the industry will, people will be there. There are smarter people who will come and fix it. That's not, I have a great faith in markets. I am not one of those that the regulator has to come and do everything. The markets will fix all these issues. But these are the pain points which are genuinely out there, which have to be.
Precisely my point, right? And to Dipesh as well. I mean, all the neo banks will eventually get a banking license, right? And that's happening outside of India as well, right?
Yeah,
You
yeah.
know, they will
It
become
is.
full.
It is. It
No,
is.
no, I'm not trying to talk about India only. Look, the regulatory arbitration around a banking license is worldwide. Okay, so
I think
because it gives you a lot of
if you
infrastructure.
allow, I think
Yeah.
there are things which are happening in the industry which are very interesting, right? I think both the government and the regulators talking about extreme amount of transparency, consumer protection across many elements, and also now saying what next innovation can be done, right? So if I look at the budget, it spoke about the government allowing digital alone banks to come in, right? And it's a path. It'll take a few years where fintechs will evolve to become banks, right? On the other hand, the guidelines for enabling digital lending is now coming in, and we are seeing the acceptance of a new age uh, revolution to take place where digitization can help further. See, uh, let's say the first part we saw UPI was a created element of the regulator and the government facilitating services, and then Paytm and PhonePe really took up to the next level that product. So I think while it's a complex industry, it is still very underserved. I think unlike most other markets here, both the regulator and the government wants innovation to happen, right? And it is up to challengers like us to use that innovation to really service customers better, right? And we have to go with that mindset that we are the implementators of the innovations, and there is railroads getting created to build something much larger.
That's interesting. So,
I just add in one more
what-
quick thing over there, just to on that. See,
sure.
it's not a zero sum game right now, as we all very well know, between the fintechs and a bank that both stand to benefit, and it might never be a zero sum game as well. Because the current landscape has made it in a way that it's not a zero sum game. That there are certain things you have, like, banks have to do because of regulations, certain things that they have achieved because of distribution and scale that they operate at, and certain things that fintechs are inherently good at in terms of understanding customer, hyper personalizing experience, using data to kind of underwrite them better, offer better experiences, services, so on and so forth. And a marriage of that kind of enables you to do certain things as well, which we have seen the examples of some of the larger fintech slash neobanks out there. So when you think about, like, as was mentioned, things that are coming up right now, like say Web3 or DeFi, which a bank inherently might not want to put it like burn its hands with like at on day zero. You'll still probably see some more collaboration happening there in terms of the more aggressive banks tying up with some DeFi player to do some XYZ things in the space in terms of decentralized finance. So in terms of even future landscapes, you might see even not just from a fintech and a banking side, but you have like banking and a service players right now. Even the likes of an HDFC kind of outsources trying to outsource its tech to one of them. That will also kind of gain prominence because if a bank has taken cognizance of the fact that hey, look, we are kind of 10 years behind because the tech has not evolved with the pace it should. Like why instead of putting investments in tech, let's give it to one of the people who are actually able to do it better than us. And I think that that way is again will not up being a zero sum game in that domain as well. So I think still think that there will always be collaboration to kind of get rid of even those defects that were pointed out. I don't think that a bank might end up doing on its own. I agree that markets will fix it, but markets will make the banks fix it probably not by themselves, but by actually tying up people who actually know how to do it well, and those might be fintechs at the end of the day. So that's what I would add in there.
So,
Let
if I
me
may,
just sorry.
yeah, just
Let me just
sure.
add a touch of humor to all of this. Listening to
Definitely.
all the panelists and having worked with so many banks on a partnership side, I don't even know why any fintech would want to be so regulated. I mean, when we can use their balance sheet and grow our businesses and serve our customers, why the hell would I want to be a bank and deal with all the regulations and all the hassles that come with it? So yes, there will always be some fintechs thinking that digital banking is the way to go or getting a banking license is the way to go. But if you ask me, that's fundamentally moving away from everything that we started out with in the first place. So I would much rather use their balance sheet, use their infrastructure, and partner with them rather than ever try to kind of be one of them from a regulatory perspective.
Okay,
That's my
thanks.
take.
So, if I may, very interesting discussion this last 10 minutes. If I may sum up the things that fintechs might be at present looking at some form of collaboration with the traditional banks, but uh, ideally it might not make much sense in the longer run, and then there are lots of challenges still in the market, and it should be the market dynamics itself which should look to rectify that, rather looking at regulators putting more compliances sort of in place. We touched upon one aspect of the digital currency or the cryptocurrency, and there is still, from the policy level, from the government side, certain ambiguity. Very broadly, it's still not clear whether the transaction within India is legal or not. So, from a fintech perspective, how do you see the impact of cryptocurrencies in the future? And once this ambiguity sort of gets settled, and how would it impact the future financial landscape? Yeah, anyone, if you can take it,
Should I put up the first point of view?
please go ahead.
Yeah, I think, see, while there's a regulatory point about uh, who, what is the correct way for customers to look at currency movements, I think there's also the point of view of protecting the consumers, right? And India is not a very, I would say, a financially savvy market where the people understand the impact of fluctuation in pricing. Like if you look at the last 2 months, the way crypto has gone downhill, and it's even further impacted with what's happening outside India now, right? And Indian consumers don't understand that yet. So there has to be a legitimacy of what's happening. um, I think the what let's talk about the digital currency, which is the another way of looking at crypto in a better manner. Storage, usage, transfer, and an authentication of money has such large use cases. Imagine if I don't have to send money from one point to another point, right? Of course, in India, the cost of moving money is quite less. But if you can eliminate that, the business opportunity skyrockets, right? And the opportunity to innovate for the consumer to have micro savings using digital currency, micro transfers is very large and powerful. Remember, most of us you work with PSU banks or traditional banks, etc., where it's not easy to transfer a 5 lakh rupee payment, right? You have to go to the branch yourself, submit an RTGS, तब जाके वो transfer होगा, right? Imagine if it can be done in a digital manner at a far more frugal cost using a platform and far more secure, both for the receiver and sending money. Now, these are some of the things which digital currency can really benefit from. The price fluctuation on digital currency is very different, right? It's arbitrage. Uh, Retail investors can't understand that, right? Invest savings is very different. Arbitrage is very different. I think I think the government's path of saying let's have a digital currency is a very positive move. I wish there was a control system coming in to protect in retail investors' savings. See, even if a 25-year-old who doesn't understand financial markets put in 5,000 rupees in crypto, for him that 5,000 rupees is a lot. He may not be putting 5,000 rupees in a mutual fund or a SIP. So for him, that loss is going to hurt. And look at the way the fluctuation is taking place, right? So yeah, I think that's the 2 points I want to talk about.
I have
This.
got 2 points out
Yes,
here.
Rajat. Please go
So,
ahead.
crypto we have to see from two lenses. First part is as a medium of exchange, okay, as a currency, which is we all call it. That is a sum of value which can be used in exchange for certain goods or services. The other part is it as a investment token, which is being exchanged right now vis-a-vis the fiat currencies, and people are seeing it as an asset class. I won't comment much on that because I don't understand that part of it as an asset class. What I do understand from an intrinsic value which is being brought in from a non-sovereign, non-controlled currency, which is highly transferable, can be used across the world. I think the time has come for that for the world, for a product like that. Okay, where a, not necessarily a country or a sovereign is the trust keeper of that or the creates an arbitrage on that, and that is being shown by the use cases which a crypto is being used for across the world, primarily in the underworld right now. That's also trade if you see from a point of view. Okay, or in kind of rogue nations or wherever the sanctions are imposed. Now Russia will move on to cryptos, okay, for trading its oil and everything, which earlier Venezuela was doing it. So these are the real trends. These are real use cases where it is being used as a currency. Okay. Now, when will you and I get our salaries in crypto? That's something which that's where we as a fintech consortium or a group need to talk about it. Asset classes come and go. There can be, you could call it as a kind of a Ponzi scheme, whatever it is. If you genuinely believe in the second part, which I'm talking about, that there is a need for a currency which is not regulated by a central authority, a sovereign or a state or a nation, uh, then there's a use case coming up. Uh, so that's how we have to see the crypto as two parts of it, the currency part of it. Now it's anybody's guess whether when will we get our salaries in cryptos. Uh, so, and if that, let me tell you that will happen. Uh, so that's not far away. Now, whether it be a central bank issued digital currency, which is unlikely to happen because it defeats the purpose. That's the thing. Yeah,
If
that's
I
a
can add
different
to it.
topic.
Yeah, sure. Please go ahead.
So there's also a third aspect, right, Rajat, which is basically the underlying technology itself, right? We are talking about cryptocurrencies without talking about the benefits that the technology can bring in. So while a
Right.
lot of the use cases, even when we've been exploring, are currently catered to by the current technologies, but there are a lot of use cases which will be enabled by blockchain, right?
I
And
agree.
the currency around it is more the incentive economy, right? How do you make something decentralized without having a central authority mandated? Right,
Yep.
you have to sort of create a incentive economy where you're maintaining the ledger maybe in different places, and you need different people to be incentivized for sort of sharing their data and so on and so forth. So
Right.
the fundamental understanding of cryptocurrencies is what people are trying to do, but actually what we should be doing is looking at fundamental technology that blockchain is bringing in. Right, blockchain is very powerful if used in the right manner. As Rajat said, there are Ponzi schemes out there which are spoiling the entire cryptocurrency market. If you've got the right use cases, right currency, this is very, very powerful, right? Again, on the CBDC, my view is that you've already got a digital currency right now in India in terms of how digital we are. Everything is digital right now. I mean, ever since the pandemic, we've hardly had to use cash, right? Everything is already in a digital manner. You'll replace banks with maybe wallets once CBDC comes in, right? I mean, who's going to be your custodian? Who's going to maintain that in your wallets? There are a lot of issues with CBDC which we are not foreseeing right now. But India is already so far advanced that I don't see a dying need for us to sort of immediately jump onto CBDC.
Okay, thanks. So we are coming to the end. So I'll just ask each panelist 1 minute. Uh, Looking ahead, maybe the next 4 to 5 quarters, the biggest trend from a fintech perspective, you feel the Indian financial landscape will witness next 4 to 5 quarters. Please take 1 minute each, very briefly. This is the last round, so maybe I'll start with you, Dipesh.
So, of course, there are multiple trends going on in the fintech ecosystem, right? Right from moving your entire banking experience to a digital space, to the way you're transacting, to the way you are buying different financial and non-financial assets and instruments online. What I see India would be moving towards would be more of a multi-factor, a real-time payment is something that I see advancing quite well in the near future, and I believe towards financial inclusion, a bigger set of customers today, almost about 600 millions of Indian customers are in the internet space, right? So this number has to increase over time, and of course, with a lot more and more innovative products coming in around banking and payment and insurance space, I see that many people would be adopting the digital way rather than even thinking of a physical brick and mortar structure, visiting banks, branches, and ATM. Right? Of course, that's not the interest of the millennials. So,
Sure,
with the likes of metaverse coming in, I'm sure India would be one of the early adopters of such kind of innovative products in the near future.
definitely. Yash, your view.
Yeah, thanks a lot, Rajneesh, for that question. So, firstly, I think that what is going to happen is that, see, because of rapid digitization, COVID, because of the way fintech firms have kind of acquired customers in the last 2 years during the pandemic, there's a lot of people who kind of had a for digital first experience when it comes to insurtech, when it comes to investments, when it comes to lending, and I would see that they're kind of getting done with the first cycle now because of the last week's price fluctuations. You'd see, there's a lot of people have actually seen the first ever market downturn, right? And that's what I meant by the first cycle. So kind of this would drive a lot of forced behavior in people when it comes to kind of getting aware of how financial services and products work, and then and it's not like you see a TV ad about that you get X% returns, you kind of put in money over there because you've seen that how it does not work out as well. So that's what one, and I think that that would kind of lead to lot more prudent behavior among sort of the Gen Z population that is kind of adopting more of the adult financial services that are being offered digitally. That's one. Two, I also think that with the with sort of the government not doing an outright regulation on DeFi and crypto, but sort of putting more things like taxes on that. It's sort of a thing that okay, it's like a lot of people that you kind of meet within that segment think that it's allowed, although that it's expensive. So we will see a lot more prudent adoption of DeFi and crypto also happening across use cases in the next 1 year in India as well, on which there was sort of a regulatory cloud so far. So these are the two quick points I'd like to mention.
Thanks. Akshat.
So, I mean, easy way for me to look at this is basically talk about what is broken, right? For me, the whole banking experience is broken. Neo banks will definitely, be doing very well. For me, the insurance piece is very broken. I don't understand even my own insurance. मेरे को क्या चाहिए, कब चाहिए, how much to manage, right? Insure tech is definitely out there. For me, cards, right? I mean, right from credit cards to commercial cards. I mean, the experience I used to have 4 or 5 years back when I used to sign 7, 8 documents, the guy would come back to my house saying, "Sir, ये वापस sign करना है आपको, ये sign आपका approve नहीं हुआ है," to basically getting cards in 2 minutes right now, right? Digital issuance. That is going to be a massive game changer in my opinion. And lastly, the whole B2B payment space, right? And we are seeing that live right now with us, dealing with a lot of clients at Finovate as well. That experience has to change a lot, and still nobody, right now the traditional guys are not sort of really doing anything in that sense, and we see a lot of disruption coming in that space.
Rajat?
Yeah, hi. So I think I can't comment on the larger stuff because there are too many aspects happening out there. Specifically to our industry, P2P, I personally believe we will start as we've started out. I think the banks, not the banks, we will continue to grow P2P as a new asset class. At some level, we'll start eating away from the fixed deposit parts of it, of the banks, and that will grow. And the other thing which we are pushing the regulator is with asset-based lending to be allowed on P2P lending platforms. If we can offer loan against property, vehicle loans, so that's our agenda in terms of looking for our industry. Rest is I don't know. That's 36,000 feet for me. So more specific on the ground things what we want to do.
Sure. Nirav, your point.
Yeah, so I'm also going to take a cue from Rajat and talk about the working capital industry and working capital per se, and maybe Akshat can join in as well. But I think there is an increasing trend moving away from post-invoice financing, moving towards pre-invoice, or what we now like to call just-in-time financing. So you're seeing a huge trend, uh, including banks and incumbent NBFCs looking to explore that space and create a market there, which traditionally has been very small. So I think that's going to explode in the next 4 or 5 months. Uh, and controversially, you're going to start seeing crypto-based lending come into working capital as a space as well. So I think those two areas I would watch out for in the next 4 or 5 months.
Okay, thank you. So, before we close, on behalf of APAC News Network, we would like to hand over a digital certificate of appreciation to all the panelists. So, can we have the digital certificates?
Don't mind offline stuff also.
No, no, we will be sending it offline also. Don't worry, our team will get in touch with you. Yeah.
No, no, I'm
So,
just joking.
Dipesh Karki, for his pioneering role in innovation and technology leadership in BFSI. Congratulations, Dipesh.
Thank you, Rajneesh. Thank you, BFSI, and thank you, co-panelists, for such wonderful discussion.
Thanks. This is for Yashoraj Tyagi. Congrats, Yash.
Thanks, Rajneesh.
Thank you. For Akshay, I think Akshay had logged out. Okay. Rajat, congratulations, Rajat.
Thank you.
Welcome. For Nirav, congratulations, Nirav.
Thank you so much, Ajay. Thank you, APAC BFSI, for this recognition. Really appreciate it.
Thank you. Uh, this is for Akshat. Congratulations, Akshat.
Thank you, Rajneesh, and thank you, APAC BFSI. Great discussion, and thank you for organizing this.
Thank you. And thanks to all the panelists again for a wonderful discussion. Wishing you all a good day, and maybe expecting if you can join our subsequent panels today. Thank you all.
Thank you.